The Nigerian Exchange Group PLC recently announced a significant investment in the Ethiopian Securities Exchange by partnering with Ethiopian Stock Exchange. NGX Group aims to support the development of vibrant and resilient financial ecosystem in Ethiopia, fostering increased investor participation and capital formation. Today on the program, we will be delving into the nuances of NGX Group's strategic investment, financial performance, market trends, and the potential ripple effects of significant company listings. Our guest is a renowned authority in capital market, Professor Uwaleke. He is a financial economist, Director, Institute of Capital Markets Studies, Nassau State University. You're welcome as usual, Prof.
Thanks so much, Musa. Compliments of the season.
Same here. Okay, NGX Group's recent entry into East Africa through its investment in the Ethiopian Securities Exchange is seen as a significant move what impact do you foresee this strategic investment having on both companies and the overall African capital market landscape?
Yeah, quite significant. I would say it's a welcome development for the two exchanges. Of course, as you know, for Ethiopia, that's the first time it's setting up a securities exchange. And of course, in doing so, it would need some help. And it's cheering to note that the Nigerian Exchange Group is one of the institutions that is providing that assistance. Of course, the Nigerian Exchange Group has come a long way. Being set up in 1960, 61 as the Lagos Stock Exchange, got renamed in the 70s as the Nigerian Stock Exchange, and recently also became known as the Nigerian Exchange Group. So I think it's quite strategic. It will go a long way to, boost not only the profile of the exchange, that's talking about the Nigerian Exchange Group, but of course on the part of the Ethiopian Securities Exchange, it will also, help to improve the liquidity of the exchange itself. The Nigerian Exchange is one of the major institutional investors in the Ethiopian Exchange, Ethiopian Securities Exchange, alongside the FSD Africa, and the Trade and Development, Bank Group, which is the financial arm of the common market for Eastern and Southern, Africa, the COMESA. So by investing in the Ethiopian Securities Exchange, the Nigerian Exchange Group has emerged, the top institutional investor in that securities, exchange. Let me quickly say that this trend is not uncommon. We'll find it, all around the world, enabled by demutualization of an exchange. You recall that not too long ago, our exchange here demutualized. It moved from just being a private company, to a company that is, has invited some, public ownership, and is also listed on the exchange. I recall that some time ago, the New York Stock Exchange also invested in the Euronext. Euronext is one of the leading exchanges in Europe, based in Amsterdam. There is also the case of even the London Stock Exchange investing in the Stock Exchange of Italy. That's the Borsa Italia. And you also have the Nasdaq also investing in OMX. OMX is the stock exchange for Northern Europe. So such investments, if you like, have been known to exist, and they've usually associated with a lot of positives, both on the part of the investor company and also the investee, the investee exchange. So I think overall it's going to be a positive development for the Nigerian Exchange Group. And we're also beginning to see that even in the share price of the Nigerian Exchange Group. Okay. Today, the share price has increased from about 22 naira, to 24 naira. Okay, that's a reflection of the confidence of the shareholders in this expansion drive of the Nigerian Exchange Group.
Okay, Ethiopia is a rapidly growing economy with diverse industry sectors. I mean, how can NGX Group also encourage the listing of Ethiopian companies on the exchange, and what measures can be taken to attract foreign issuers to list on the market?
Yes, yes. The Ethiopian economy is one of the economies one would describe as one of the leading economies in that region. Although recently we hear they are also facing, like many economies, developing economies are facing, challenges. Right now, there is the issue of, considering whether to devalue the Ethiopian birr, for the purpose of assessing IMF loan. But be that as it may, as I said, it offers a lot of potentials for the Ethiopian economy, particularly, given the fact that in that region, apart from Egypt, having an Ethiopian securities exchange there will, position Ethiopia to attract a lot of investments. The way it is now, the way it is composed, I think the government is holding about 25% and has allowed investors to take up 75% of such. So that holds a lot of promise. Now, what has happened will no doubt incentivize cross-border flows. You should expect that not only local companies in Ethiopia will now have the opportunity of getting listed and having more access to funds, but you should also expect, even foreign companies now coming to list in Ethiopia, especially now that the platform has been provided. Before now, there was no exchange, so there was no platform for those companies to come and access funds on a medium to long-term basis. But with the exchange in place and with the technical assistance being provided by the Nigerian, exchange group, I'm pretty sure in terms of capital formation, Ethiopia's economy, would be a lot better for it.
Now, shifting our focus to NGX Group's robust financial performance, they recently declared a profit after tax of 5.2 billion naira and a dividend of 1.5 billion naira in their full year 2023 financial results. So, what factors do you think contributed to this positive outcome?
Well, that's if you look at their a number of their metrics, you'll find that there was significant improvement over that of the previous year, despite the harsh economic environment. I think the management of improvement in the running of the company, is one, especially in terms of expense to revenue ratio. You also notice that in terms of new businesses, for example, the exchange also performed well, which is also where I would like to situate what has just happened, the expansion that the exchange is about to embark on. Okay, all of this will eventually rub off positively on the bottom line of the exchange. The improvements we've also seen in even in infrastructure, modernizing trading infrastructure has also helped to boost the revenue lines for the exchange, and this is what I want to see, continue in the near future. And as I said, we have also seen that reflect even in the share price of the NGX Group, that at some point came down to as low as 21 naira. Today, it's it's looking up once again to 24 naira. And you also notice that even the subsidiaries too have helped to boost the income of the entire group. That's talking about the regulatory arm and also the real estate arm. So I think they have all worked together to ensure that the shareholders of the exchange, the Nigerian exchange, group, get, something in return.
Okay, at this point, there's this issue of inflation and cost of living crisis, and most economists will advise people to invest rather than spend, because at this point you won't get the much needed value for your money and things like that. So do you see the capital market as being an option for investment at this point in time?
Yes, a very veritable option, because if you look at it critically, it's the capital market is about the only place now where you can find returns on investment that are above the inflation rate. When returns are above inflation rate, you say they're positive. So a positive rate of returns today have come from the markets as opposed to other asset classes. Today, as we speak, if you look at the year-to-date return of the Nigerian stock market, is around 38% and 9%, and inflation is at 31.7%. As of last month. So you find that the returns from the market, are positive. Compare that with returns even in the fixed income space, for example. I'm talking about the stock market now versus government securities. The highest we've seen. We've seen returns of about 26-27%, which are still below the inflation rate, which is also partly why the central bank has been, hiking rates. So if you look at it generally, the stock market, holds a lot of promise, especially when investors, diversify their investments, because in that market, the 38% I mentioned is just the average. There are also stocks that have, or sectors that have even returned a lot higher. The industrial goods sector, for example, has returned between January and now 78%. That has been the highest. Okay, so the same for consumer goods sector, where you have the likes of Boa Foods, the industrial sector, the likes of Dangote Cement. Okay, so anybody that has invested in Dangote Cement, for example, would be enjoying not only the return from capital appreciation, which, as I said, by as much as 78%, but also the dividend. Dangote today Cement has declared dividend of, is paying dividend of 13 naira, per share. So you can see the kind of return the person will be enjoying by investing in the stock market. So the stock market promises to be a very, very veritable, channel of investment as compared to other asset classes, perhaps apart from property. Okay, and what we also know that property investment has a lot of risks, and in terms of liquidity, they are not as liquid as your investments in the in the stock market. So it's one area I will always recommend for any investor.
Okay, thank you very much, Professor Uwaleke. Well, you heard it, people. The capital market is a place where you can go and invest your funds so that you can get better return. Thank you for sharing your thought with us, Professor.
My pleasure. Thank you.